Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. Today I have Marco Santarelli. Marco is an investor, author, founder of Noria Real Estate Investments, nationwide provider of turnkey, cash-flowing properties. Since 2004, they've helped over 1,000 real estate investors create wealth and passive income through real estate. He's also the host of the Passive Real Estate Investing podcast.
Glenn, it's great being on your show. Thank you.
Is there anything else we should add to that? I don't know.
No, you pretty much covered it. I mean, 14 years, been helping investors create financial freedom, and we're market agnostic, so we don't focus on one specific market, and I think that's an important thing. Is you need to disconnect yourself from the investment and the market, and be emotionally detached, and so that flexibility allows us to pick the best markets at the right time with the best cash flows, and that's the model. So that's what we've been doing. That's where I started personally investing, and that's how we grew this business.
So where did you start personally investing? What state did you start in?
Well, we're both Canadians.
Yeah.
So it's not a state. Actually, it was the province of Alberta. That's where I got my first property, and I was 18 at the time. As soon as I could qualify for financing, I jumped in and I bought my first property. And the writing was on the wall. I got my real estate license in Calgary, and then I started buying more property. And then just to kind of fast forward, because I've always had businesses on and off through time, and some of them were failures and some of them were successes. But you fast forward to 2003, I got back into real estate investing, and it was around that time where I just started meeting a lot of investors and jumping in head first, living in Southern California, investing 3,000 miles away in other states. That included Michigan, Georgia, and Florida at the time. And in my first year, which was 2004, of getting back into real estate, I had accumulated or purchased 84 doors in 1 year. So 12 months, 84 doors. And it was a lot, and I did it remotely. And of course, I tripped and fell and made a lot of mistakes in the course of doing that. But that created a process and a roadmap that solidified the right methodology to invest from afar. And many people experience this today because of what I had done back then, including yourself.
Yeah.
So, but yeah, that's kind of in a nutshell my story of investing and reinvesting in real estate.
So it wasn't the real estate that actually brought you to the States. You were there for another reason then.
Yeah, that's another story. I was kind of a third partner in a quote unquote .com type of business where we raised venture capital funding, and it was great while it lasted. And then the NASDAQ crashed back in, I think, 2001, and then our venture capital funding dried up, and we had to fold the company. And so I took 2 years off and decided, you know what, my passion and love is real estate. I want to help as many people create financial freedom as possible. So that's where the business kind of grew from.
Did you have a green card beforehand? How did you make that leap to even get down there?
Interesting question. No, I didn't. The specifics is this: I came down on a TN visa, which is a treaty NAFTA. They call it a TN1, and I had that for a number of years because that's really the stepping stone to go to the next level, which is a green card application, actually. And so years after the TN, I got the green card, and then after 5 years of holding a green card, you can apply for citizenship. And so my wife and I both applied for citizenship, and after, I'm not sure how long, a period of time, we ended up getting our citizenship. So actually, yeah, we've got the citizenship down here, and we live down here. But
if someone was new into doing these turnkey rentals, what would they expect from their first purchase?
I always say that investing in real estate always starts with you. It's really what your investment goals are, and it always starts off with you, and then what your strategy is. Most investors want to be passive real estate investors. They want to build a portfolio. They want the passive income. They want the cash flow, and they don't necessarily want to be dealing with distressed sellers, distressed property, swinging hammers, and flipping property. That's an active model. That's a business. It's transactional. It's not passive income. So it really comes down to you, what you want to achieve. Now, the people who ultimately call us and the people that we talk to are investors that want to be passive real estate investors. They want to acquire a portfolio. They want that passive income to generate financial freedom, which ultimately leads to the thing that everybody wants, and that is time freedom. Freedom to spend with your family, your friends, and do what you want when you want. That's what we're all aspiring to, because then we can do what we want and give back to the people we love, and be doing charitable things. So so your goals break down into your criteria, and when we talk to investors, or when you talk to yourself about what you should be doing, you really need to define, what is it that I'm looking for. Let's make sure it's realistic, and if it is, great, then let's look at the markets, the neighborhoods, and the property types that meet that criteria in terms of what you want to invest in as a real estate investor. This is the process that we go through with our clients. We kind of get into their head and pull out that information. Sometimes they know, sometimes they don't. A lot of people will contact us saying, hey, you know what, I want to invest in real estate. I get it, and I know I need to do it. I don't know a lot about it, but I need someone to guide me and hold my hand. And we just take those people and just say, okay, where are you at today? Where do you want to go? How much are you working with? What kind of credit do you have? Even if you're Canadian, there are financing options for Canadians to invest in the U.S. And as long as you've got the right team around you in terms of acquisition, financing, inspection, title company, attorney, your CPA, and all that kind of stuff, we help you with all that. But that's a long answer to your short question. The real answer is that it starts with you, and let's define what you want, what you need, and then let's make sure we can find that for you. And maybe we can't help you. Maybe you have to talk to someone in another state that's referred to you by someone, or maybe you vet them out, but all starts with you.
So for people who are assuming their first property, what kind of things should they expect, like from guarantees from the turnkey operator, any guarantees on maintenance?
First of all, I will say that, guarantees are far and few between. There are some companies that offer various types of guarantees, like a tenant placement guarantee or a rent guarantee or whatever they may be. You should never base your decisions based on guarantees. They're more like icing on the cake. If they're there, they're nice to have, but you shouldn't need them to start with, and you shouldn't rely on them if they are there. Expectations vary. It depends on the type of market and the type of growth in the market. So I like to look at the cash-on-cash return, but I also like to look at the whole picture, because it's not just the cash-on-cash return you have from a property. It's the amortization of the loan and the appreciation you get, plus, if circumstances are right for you, the depreciation on the property is a wonderful tax benefit. I'm not sure how that applies to Canadians, but here in the U.S., we've got all the expenses on a property are a deduction in terms of your income and expenses, and then whatever's left over, your net, your net income is what is taxable. And if you have if you have a good tax strategist, a good tax advisor, and they have your affairs set up properly, you could virtually zero out your tax impact on any income from real estate. Now, you as an investor, or your listeners listening to this, you might lean more towards cash flow and cash flow markets, or you might lean more towards growth markets. Now, we're never going to speculate. We're never going to look at a market that's purely an appreciation play. The property needs to make sense the day you buy it, from day number one. It needs to be cash flow positive from the get-go. And it needs to be in a sustainable area and in a sustainable market where there's jobs and job growth. So if you have those things as the foundation of the house, no pun intended, but if you have that as the foundation, then you are set to do well in good times and bad, because everything cycles. There are business cycles, there are real estate cycles, there are economic cycles, and you could weather through that if you are positioned in the right market, in the right neighborhoods where you have large tenant pool, you have cash flow coming in, it's cash flow positive, and if there's fluctuations in the rental income, it doesn't make an impact on your ability to sustain and keep that property. Because I call cash flow the glue that holds your deal together, and you want that glue because your tenant's paying the mortgage. Your tenant is buying the property for you. So as long as that loan is being paid and you got all your expenses covered, including vacancy and maintenance and repairs, what's left over is net income. It's spendable cash. Go straight in your pocket, or you could reinvest it. Anyway, I'm going off maybe on a bit of a tangent.
No, like the cash flow thing is a good thing to talk about, because I hear in Ontario, like, because of the way the prices are now, and A lot of investors are buying these properties, and it scares me because they're going on. It doesn't really matter if it's cash flowing because the market is going up so much every year that you can make $20,000 every year just because of the appreciation. But like we were talking off air beforehand, it's a market, it's a cycle, right?
Yeah. So let me challenge you on that a little bit. There are so many people in Canada, especially in Toronto and Vancouver, among many other markets. This is true. I see this happening in Calgary, Edmonton, and many other markets where property values have been appreciating for so long that people who are putting money into real estate are calling themselves investors. The reality is their cash flow is negative. They don't have any cash flow. They're basically covering the nut on these properties they're buying because their debt service is just too high and they've overpaid for a property. So the point I'm making is that they're not investors because they're not putting money into something where that asset generates positive income, positive cash flow. It's a speculative play. If you're buying $1 million property, you're hoping that next year it's worth 1.1 million, and you could have made $100,000. But that's not a realized gain. It's on paper. It's just what shows up on a balance sheet. But until you actually liquidate that property, that 100,000 is not profit. It's just it's paper profit. That's the thing. I see this in coastal markets in the United States, all along California, New York, New Jersey, all the way up to Spokane, Washington. These markets are inflated and have been appreciating for many years, well above its historic average, and so that is not sustainable. So now these markets are inflated; they're overpriced, and the price to the rent ratio has increased so much that you can't cash flow, you can't get a rate of return because the rent lags far behind that price appreciation, and it does that for many, many years. Well, this is what happened in Vancouver and Toronto. It's been appreciating so much, so fast for so many years that it's impossible for rent and income to keep up with it. And so how do you buy a property with a reasonable down payment and pay a reasonable price and have any expectation of a rate of return? It just doesn't happen.
Yeah, so, no, it's scary because if the market does make an adjustment, there's going to be people who, they're just upside down on these properties. Right,
exactly, and that's what's happening.
My first property I bought through I was with Melissa, which is one of your I don't know, you call her your associate investment counselors. So I worked with Melissa, and we bought a property in Huntsville, Alabama. Everything went through, we closed, and then after 1 month of owning the property, the sewer line broke between the house and the road, and it backed up into the house. And at first I had the plumbers there, and they gave me a quote of $3,500, and I thought, you know what? I was about to pay it, and I went, you know what, let's call up Melissa and see what can be done. I was like really frustrated with the process. And then Melissa came in, she talked to the local people, and they were over there 2 days later, dug up the yard, fixed the whole problem, and I didn't charge me a penny. I walked away, and I had the most happy feeling with Norada because of that. It worked out amazing, and they said it wasn't their fault, and I completely agree. They said we never had a massive amount of water running through the property because we weren't doing a plumbing upgrade, and they said it wouldn't show up in a property inspection, but we feel like that should have been fixed by us if we would have known about it. So they fixed it all for me. I was greatly appreciative.
I did not know about that, to be honest with you.
Yeah,
I had no idea. But I'm
sure you're wondering where I was going to go with that story.
It didn't matter where you went with it because I was obviously going to step in and make sure that you got taken care of.
Yeah.
Because that's just the way we work around here. But that story illustrates one thing. We've been doing this for so long. We have such tight relationships with our teams on the ground. What we call they're essentially like joint venture partners, but they're our property providers, and we are agnostic. We're not married to a market. We're not married to a provider, a lender, a title company, an inspector. We're just agnostic across the board. But because we have these good relationships and we generate a lot of volume every month and every year, these companies that we work with know that we are a very good strategic partner for them, and so they bend over backwards. It's not that we're exerting leverage on them, but we do have leverage on them, and so they're willing to bend over backwards to help us as a company, as a strategic alliance that we have, and to help our clients, guys like yourself, when situations like these come up. When you're dealing with real estate, there are many moving parts. Plus, you're dealing with people. People are human, and people do dumb things, and sometimes dumb things happen, and unfortunate things happen. Whether it's a job loss, a transfer, death in the family, whatever the case is, and so. We just need to be able to deal with these things rationally and objectively, and so that's what we always do. And whether it's us or the property management company you're working with, at the end of the day, we try to make it as hassle-free as possible and as smooth as possible, knowing that it's never a completely smooth road. There's going to be gravel and bumps along the way, but ultimately it's by far the best investment you could possibly make. So that's the trade-off.
Yeah. One of the big things that got me into Alabama was landlord laws and low property taxes.
No, you hit the nail on the head. The state of Alabama has extremely strong laws in favor of the landlord. They have very favorable tenant-landlord laws. If a tenant doesn't pay, the property manager will file a quit, a pay or quit, and they have. I can't remember the exact number of days, but they have a very short period of time to make good on that past due rent payment. And if they don't, then the property manager or you can file an eviction notice, and by the end of the month, it can be that quick. By the end of the same month, they could be basically tossed out of the property. So tenants don't really screw around in that state.
I found that it was so fast that. Well, because I had 1 month where the person was late, they're like, "Do you want to do an eviction?" And I was like, "I'm used to Ontario tenants, right?" And they're like, "Oh, they're like, I think it was 10 days late." And I'm like, "Do you want to start the eviction?" And I was just like, "They're only 10 days late. Like, I know I legally can start."
Yeah, and in some states, and I'm not sure about Ontario, but some states and provinces, you can get what I refer to as a professional tenant. They know how to game the system, and they could literally be there for months without you being able to do anything to get them out of the property. And they don't pay rent. They'll just ride it out, and you won't find that in Alabama. Alabama is one of a number of states that are like that. Also, the state of Alabama has, relatively speaking, low property taxes, which obviously helps towards the cash flow of the property. Everything's relative, of course, in real estate. Like Texas, as an example, has high property taxes. It's about 4% of the property's value, but at the same time, they have higher and stronger monthly rents that more than make up for that. So even though a state may have high property taxes, you got to look at the overall picture, the income and expenses as a whole. But Alabama is great because there's strong job growth, and it's kind of a diamond in the rough. A lot of people don't know about Alabama or talk much about it, but there's a very strong tech, like IT, information technology influence there. Birmingham has a lot of growth, a lot of blue collar, but a lot of white collar. It's really a great market, and a lot of people don't really know much about it. But for those that do, they realize that they can get properties for $100,000 to $150,000 US. That will rent for roughly 1% of that per month. So $125,000 property rents for roughly $1,200 a month. Your taxes are probably only $100 to $120 a month. Your numbers are very favorable. If you bought that property all cash, you're looking at $800 a month ish in positive cash flow. If you finance it, well, great. Higher cash on cash return, but slightly lower cash flow, and that's the way it works.
Yep.
So.
Yeah, and then there's like some really big employers in both Birmingham and Huntsville. I know Birmingham has Mercedes, Regions Bank, Graybar, and I got Huntsville with Boeing, Toyota, Lockheed Martin, FBI, NASA, Remington Arms, Polaris.
Yep.
If you get lucky enough to get military tenants, they have to pay their rent.
Yeah. They don't mess around, because if they're later, they skip. You can report them to their CO, their commanding officer, and a lot of times their rent is actually subsidized by the military. So you're actually getting it from the government essentially. It's not really coming from them personally. They make a small enough salary as it is being in the military, so their housing is being subsidized. So yeah, it's like having government assisted rent payments, and the military's not going anywhere. I mean, they've got bases throughout the United States. Whenever you're near a military installation, odds are there's never going to be a closure. I mean, it's happened in history, but it's pretty rare for them to downsize or have a closure. Usually you have a very stable base of tenants in and around any kind of military base or installation. I'll make a quick comment about the three markets, Birmingham, Montgomery, and Huntsville. They are affordable markets. And very much a cash flow market. Those are cash flow markets. They're very, I'll call them boring markets, but we like boring because they're stable, steady, cash flow generating rental properties. We don't see the Alabama markets don't have a strong history of price swings, which is a good thing, or price appreciation. Over time, it just keeps up with inflation, which is ultimately what you want hard assets to do, and real estate is a hard asset. So you've got great cash flow, you've got stable growth, and you have well-priced properties in a market that has a very large tenant pool and good rates of return. So you look at those as cash flow markets. If you're looking for stronger growth potential, like someone is interested in more appreciation, then you could go into a hybrid market that's a cross between cash flow and growth. And some of those markets, not all, but some would be like Jacksonville, Florida, Atlanta, Georgia, maybe to a lesser degree today, but Dallas, certainly Houston.
Would Kansas City fit in there?
Yeah, Kansas City, Missouri is definitely a hybrid market. It started becoming a hybrid market about 3 years ago. So it's a very strong market right now. But prior to that, it was more of a cash flow, or what we call a linear market. For many, many years, it was kind of a boring, smooth, and steady city, but there's just a lot of jobs and growth right there right now, and it's pushing prices up. My general rule of thumb is to build a footprint in one market of 3 to 5 properties, or more if you want, but 3 to 5 properties in one market. Build a solid footprint there with one property management company, and then move to the second market and do the same thing, 3 to 5 properties there, and then move on to that third market and do 3 to 5 plus there. And so you want deeper roots and a more solid footprint in a market before you go too wide. I mean, the last thing I'd want you to see is have 20 properties, one in 20 different markets.
Yeah, I understand. And because then you get, it's about, a lot of it, like with real estate, it's building relationships, right? And so
yes.
So you'll develop possibly a better team in that same that same market.
Yeah, and who you deal with the most is your property manager. So you're going to have a strong, deep relationship with your management company, and if they're managing multiple properties for you, you become a more important client. You're not just a one property client; you're a 5 property client.
Well, thank you for coming on the show, Marco. I really appreciate your time. It was nice to actually talk to you face to face. I've been listening to the podcast for probably at least a year and a half.
Oh, well, thank you. I appreciate it. Yeah, I need to get back on the horse there and start recording some episodes. I've kind of fallen off. I've been traveling so much here the last 4 months. I've been doing sporadic episodes, but yeah.
Yeah.
I'll get back on it.
All right, perfect. Thank you.